Okay, so the recording has started now. Overtrading. What is overtrading, right? Because that's one of the biggest reasons that a lot of traders in the forex markets, or even stock markets, or any other financial market in the world lose money. So let me just get started. So overtrading is when you're excessively buying and selling. Currency. It could be any currency pair, it could be stock and commodities, without any clear goal or aim in mind. So you're excessively just buying and selling. You're opening orders and closing orders without any clear objective, any clear goal, or any clear aim in mind. That is what we call overtrading. And if you're one of those guys that have experienced probably growing your account by, let's say, X amount of percent over like 2-3 days, and then blowing it after 2 days, then you probably have experienced overtrading. Every single person that I've traded has been a victim or as actually is guilty of overtrading in their past experience. So the question is, why do people do it? Why do people overtrade? Well, there's three main reasons that I've identified. One of the reasons is, the biggest reason is because of the fear of missing out on opportunities. People are scared on missing out on opportunities. Like, for example, they go into the markets, they look at a currency pair and they see that it's trending downwards, and they see that the price is really pushing down and there's a strong impulsive move. So what they do is, because they're scared of missing out on the drop, they sell straight away. They go in, they sell straight away, and they're hoping to capitalize off the remaining move. Now that's overtrading. Let's imagine you've already placed your trades earlier in the day. You've taken your profits earlier in the day, right? But you want more. Now that's where greed comes in. Greed is another reason people overtrade, is because they want more. They're not satisfied with what they already have. They want more and more and more. And because they trade more and more every single second, every single minute, every single hour, they end up losing all that hard-earned profit at the end of the day. And another key reason people overtrade is revenge trading. So you guys probably have experienced this before. I've personally done it in the past at some point. Where, for example, I know there's a great opportunity on a pair, let's say a great long potential, and I decide to place my order to enter the trade. What happens though is price keeps on pushing down. So yes, the price is going to reverse, but it doesn't reverse when you expect it to. So what happens is you get stopped out. But eventually price reverses and begins to go in your intended direction. But what you now do is, because you're so annoyed of losing money when you were right, you decide to revenge trade. You decide to go in on the buy and start and just profit from the price going up, because you still believe that is the direction of the trend. Now, guys, I know many of you have been victim of this. If you have been, I want you to drop some number ones in the chat box. If you recognize the scenario that I'm explaining to you right now, where you've revenge traded at some point in the past, you've traded out of greed, or you've traded out of the fear of missing out on opportunities. A lot of us have actually done that, and that's why people overtrade. So what is the way out of this? How do we actually get out of a scenario where we're overtrading? It's very simple. You got to develop a trading plan. Why? Because when you have a plan, when you have a strategy, when you have a direction, the chances of you missing out opportunities is very little. Chances of you trading out of greed is very little. And chances of you wanting to revenge trade is diminished. Why? Because you have a plan in place that is going to prevent you from taking any unnecessary risks. Okay? So the question is, how do I develop a trading plan? What is a trading plan? We always talk about it, but a lot of people don't actually go and implement it. And at the end of this call, I want you to use the information I'm about to give you right now, and I want you to go away with this information, and I want you to create a trading plan for yourself before you go to bed tonight. So there's two different types of trading plan. So one is called a simple trading plan, and the other one is a sophisticated trading plan, right? So one is a simple trading plan, and the other one is a sophisticated trading plan. So what is the simple plan? So the simple plan is where you're aiming. You have a goal of a weekly growth target. So you're like, I want to grow my account by X percentage every single week. You have a maximum daily trades that you can place. So you can, for example, place a maximum of 2 trades a day, 10 trades a day. And after that, you cannot trade anymore. You have a you've basically identified a maximum lot size you can open per position. So per position, you can probably say the maximum lot I'm going to open is 0.1. Because now what that's going to prevent you to do is going to prevent you from getting greedy and going in at a standard lot size when your account wouldn't sustain that kind of a volume. And then, of course, the pips targets. You have a targeted amount of pips that you want to get every single day. So you're like, I want to aim to get 20 pips a day, 30 pips a day, 100 pips a day. You know, a lot of different people have different pips target. It could be a week. It could be, I want to aim to get 500 pips a week or 50 pips a week. So, but you have some sort of target that you want to get out of the market. And that is a simple, this is basically what goes in a simple trading plan. I'll give you an example of what it looks like when it's applied. So when you're doing a trading plan, you need a notebook, or you can do it on your computer. You can use like a spreadsheet, okay? So you're gonna have your account balance stating what your balance currently is, which is $500, for example, right? And then on top of that, you're gonna have your weekly growth target. So you wanna say, okay, cool, I wanna grow my account by 10% a week. Now, that's very ambitious. 10% a week is very ambitious, but it's doable. You know, I've done it many times. I know many people can do it many times as well. So 10% is only $50. So that means every single week you're aiming to grow your account by $50, which is very good. Now, the maximum daily trade you can place is 2. So you say, okay, cool. The maximum trades I can open in a single day is 2 positions. And after those 2 positions, I'm not going to open any more trades. And then the third part is your target pips. Okay, I'm going to aim to get 30 pips a day, maximum. I don't want anything more. So once I get 30 pips, I'm out of the market and I'm not going to trade anymore. Why? Because I have what I want. And then the last part of your trading plan is maximum lot size per position. So per position, I'm only going to open a maximum lot size of 0.10. And for you guys that already know the value of lots, you know, 0.1 represents $1 per pip. So that means that's the maximum lot size that I'm going to open per position. Okay, so that's an example of how to apply a very simple trading plan. Now, the second is your sophisticated trading plan. So the sophisticated trading plan is a combination of your simple trading plan plus a bunch of other stuff. So what I just told you, that's part of your sophisticated plan. But now this is what you're going to use to expand your trading plan to make it more sophisticated and to make your results a lot more consistent. Okay, so number one, a clear, defined edge. What is an edge, right? An edge is, let's say, a strategy, is a way for you to look at the market, a certain opportunity you're looking for in the market that would allow you to maximize your profits. So that's an edge. Every great trader has an edge. They have a defined edge where they know exactly what they're looking for when they go on the charts. The second is you need to have trading restrictions, right? You need to know when to trade, and you also need to know when not to trade. You need to know what to trade, and you also need to know what not to trade. And that's a sophisticated trader. And you need to have mental and behavioral habits. So for example, you need to know, what do I do before I go in front of my computer? And when I'm not trading, what should I be doing? You need to have a currency pair focus. So you need to be focused on certain currency pairs. Like what I've noticed is some of the best traders in the world, they don't go and start trading whatever they can find. They trade only, they master the movement of certain markets, and that is what they focus on. For example, myself, I just trade pound Aussie dollar and pound yen. If you guys are in my Telegram signals group, you have noticed that every single one of the trade that I put out every morning is either pound yen or pound Aussie dollar, nothing else. Because those are the currency pairs that I focus on. And then you have your defined risk parameters. So you know exactly what your risk is. So why? Because you know that, okay, cool, if I bypass this risk, I'm gonna stop trading. So let me break it down for you with an example. So let's say, okay, you got your notebook in front of you and you wanna expand on your trading plan. So the first is you need to identify what is your defined edge. You know, when you open the charts, what are you looking for? Because a lot of traders, they don't know what they're looking for. They go into the charts and they don't look for anything specific. Now, for a lot of you on this call, if you're trading based off signals, or if you're trading based off another trader's strategy, that's fine. That could also be your edge. Okay, so your edge doesn't necessarily need to be you doing the analysis. But here's the thing, you need to have an edge. Trading restrictions, another thing that is very important. So for example, let's say as an example of a defined edge, it could be something as simple as I will only seek opportunities to trade when the price has formed a double top or a double bottom on a major reversal zone. That could be an example of a defined edge, right? A defined edge could be anything, but if you're looking for a certain market structure that you're looking to always capitalize from. Trading restrictions, I will only trade the London session and pound pairs. I will not trade commodity pairs such as the gold or strong correlated commodity pairs like the USD CAD. Okay, so these are pairs you're looking to avoid. But as well, at the same time, this is the only pair that I'm looking to trade. So you definitely need to have trading restrictions if you want to become more consistent long-term as a trader. You need to have mental and behavioral habits. What does that mean? For example, I will only check my trades from my home desktop. I will never monitor positions on my mobile phone. I will meditate for 5 minutes before analyzing the markets for opportunities. Again, these are like behavioral habits that you can put around your trading plan that will allow you to be a lot more successful and a lot more consistent as a trader. Because let me tell you something, it's all about consistency. If you can do the same mental and behavioral habits every single day, that could correlate with your results as well. And then your currency pairs focus. Again, what currency pairs are you focusing on? Every great trader has a focus on certain pairs. I don't know any trader that is making really good money that looks at any pairs wherever they want. I know some traders that they just trade gold. Some traders that they just trade pound. Some traders just trade dollars. Some traders just trade Canadian dollar pairs. It doesn't matter, but you need to have a currency pair focus. And this is something that you're going to figure out as your experience in trading grows. So for example, my primary currency pairs are pound USD, pound AUD, pound JPY, and pound CHF. Now, that's not for me personally. This is just an example of someone that's setting a trading plan with a currency pair goals. And finally, you need to have defined risk parameters. So what do I mean by this? So you need to define the maximum account exposure you want per day. So how much of your account do you want to expose every single day? Okay, so for example, you can expose just 5% every day. So that means when you lose 5% of your account, you stop trading. So any day that you lose $25, you stop trading for that day. You need to have a maximum exposure per week. So let's say that's 10%. So let's imagine 10% of $500 is $50. So let's say within the week, if you lose $50 at any point in that week, you will stop trading for the rest of the week. So that means if you lose $50 in a single day, that means you're not allowed to trade for the rest of the week. And that is how disciplined you need to be as a trader for you to be consistent. And that discipline or lack of discipline is why a lot of traders lose money. Okay, you need to have a maximum exposure per position. So every position that you get into the market in, for example, you only want to risk 3% of your account. So that means your stop loss is going to be set where you're only risking at least 3% of your account, at most 3% of your account. And you need to have a preferred risk to reward ratio. So what is a risk to reward ratio? So for a lot of experienced traders, we know that, okay, cool. If we're going to go into a position, it has to have the potential to give us a certain amount of profit. And if that trade goes against us, we're only going to lose a certain amount of money. So a preferred risk to reward ratio is 1 to 3. So for every £1 I lose, I want to gain £3. For every $100 I make, I want to gain $300. For every $1,000 I might lose, I want to gain $3,000. So you need to make sure you define your risk to reward ratio, okay? Look, I want you all to understand one thing very simple, is there is always opportunities in the marketplace, always, right? The Forex market is full of trading opportunities every single day. There is no day that will go past that will not present you with a great opportunity to make money from Forex, okay? And the market is there to reward you. The market is not your enemy. The market is not against you. The market is there to reward you. So why do you revenge trade? Revenge trading is you thinking the market is trying to take your money. It isn't. It isn't. The market is there to reward you. All you simply need to do is identify the opportunity so that you can receive that reward. And this is the kind of belief system, this is the kind of mindset that you need to have. Now, another part of developing a plan. Now, for a lot of you guys that use different trading tools, you maybe use Signals, you maybe use the trading tool like, the Traders Gemini, you maybe use iGoTrade. Like a lot of you guys, you receive your trades from different places. Now, let me tell you the primary mistake you're going to make is using the same account for all these different tools, all these different strategies, and all these different services. That is your number one mistake. Do not use the same trading account for different tools. Why do that? You're overburdening your account. You're putting too much risk on your account. The smart thing to do, the sophisticated trader would divide your account. So for example, let's say that I'm receiving signals from 2 different sources, okay? What I would do is I would have 2 separate accounts. I would have one account for signal A and the second account for signal B. Because now what that means is my risk is now spread out And if one signal is a better quality than the other signal, it is not going to affect the general balance of my account. That means one is going to grow and the other one is not going to grow as fast. So you need to learn to spread your risk. Stop putting your personal trades, the trades from Traders Gemini, the trades from iGoTrade, and even from whatever signal services you're subscribed to. Stop putting all these trades on the same account. It doesn't make any sense. You're going to blow your account if you do that. And we're not here to blow accounts. We're here to grow our accounts. A big difference. But it comes from the habits. It comes from the behaviors that we develop every single day. So that's what I'm going to wrap up with is, look, the market is there to reward you. The market is your best friend. Now, guys, for those of you that are, part of the Elevate Market movement, for those of you that are part of what we're doing right now to create professional traders, we have a penthouse event on Tuesday. So we're meant to have one Thursday, which was actually today, but we postponed it to next week, Tuesday. Why? Because we believe in giving as much value as we can to people. So if you want to attend the next session, it is exclusive. You do need to be confirmed. Your attendance needs to be confirmed before you're even given the address. So for you to actually receive the address, you need to first of all RSVP on our website. So go to penhouseprofits.co.uk and RSVP if you want to attend the Tuesday advanced training session that we have coming up. Now, this session is absolutely free of charge, and the information that we give out in this session is absolutely invaluable. And there's a lot of people that have attended the past 3 sessions and they're beginning to get a lot of results from trading. So my advice, guys, if you live in London, RSVP on the website, penhouseprofits.co.uk, and attend the next session that we have coming up. So guys, that is it for me, right? That is the end of this training. What I'm going to say, guys, is this. For those of you right now that are getting started in trading, right?